Hey guys, welcome to today's session. I'm just going to get the link sent out before we jump into things. Discord done. It'd be helpful if I could share this, wouldn't it? How are we doing, guys? Welcome, welcome, welcome. All is well on my end, dude. Hope it is to you too. Rapalas, welcome. Just gonna get this link sent out. It seems like Twitter's working now, which is great. It wasn't for a long time. So bear with me for 2 seconds and we will be done. Awesome. The sun is shining in the UK today. It's actually pretty warm. I'm going to open my blinds a little bit, so it might get a little bit brighter. Is that any better? That's probably better. It's nice actually to be here and not just feel like I'm sat in complete darkness, because usually by the end of these sessions, especially the Tuesday live stream that we usually do, which is now changing moving forward, we are running at 4 p.m. UK time, whereas historically it's been 5 p.m. It's nice to do it and it still be a little bit light outside. How is my dog? Yeah, my dog's good. I don't know where she is. I think she's at the bottom of the stairs. You'll probably hear her kicking off in a minute anyway, as per usual. What was I going to say then? I completely lost track of what I was going to say. It's been a bit weird recently. Like I haven't been on a lot of live streams. Blaine has been doing a lot of covering. Oh, that's why you asked about the dog. Sorry. Yeah, so I had to take the dog to the vets yesterday. Basically, I'd found a lump on her tummy behind one of her teats, but it's disappeared now, and the vet puts it down to an allergic reaction because on the weekend her face swelled up as well. So 2 parts of her lips on either side. One was the upper lip, one was the lower lip, had swollen. So I'm not sure if she'd been bit by a spider or stung by an insect or ate something that, you know, she maybe shouldn't have eaten. But she's had it in the past a few times. So the vet's basically prescribed her some antihistamine so that if she swells up again in future, at least we can sort of treat her at home. But she's all good. Thank you for asking. Yeah, she's still going to live another day and continue barking on the streams. So you haven't got rid of her yet. Markets look good actually in March so far, especially coming from somebody who really struggled in February. I did not have an enjoyable month in February. Neither did the index. You can see the index sort of capitulate at these highs. That's what it looked like. It looks like a bit of a rug pull back in Feb. But what's great with any sort of asset like this, right? It doesn't matter 1 month in isolation, whether it's really good or really bad, isn't kind of the whole picture. Now, if we look at last year, February was a minus 6.6% month. So again, not a great way to start the year, but then look how the year ended. We ended up 27.61% for the year in total. Now, again, coming into 2026, we had a really strong month on the index at 8.65%, which was phenomenal. Obviously, a lot of that was due to the rally in metals and all of the sort of geopolitical things that was going on in gold and silver and stuff. But then February came and pretty much did a complete U-turn. Now, luckily, we're still up for the month. The index is still up, for the year, 3.39%. So on aggregate, hopefully across the rest of the 2026, you know, we continue to make new highs. So yeah, it feels good for the market feels good at the minute. I think it's specifically for algo traders and breakout traders. February was just a month of chop. So I've also changed my chart colors, just FYI. So things are going to look a little bit different. Now, tell me this, right? We did a market review session back in mid-Jan, and it was actually on this day. And I said, look, Bitcoin's going to tank from here, most likely to this level. That's happened. Now, to me, this just looks the same, but different. It looks exactly the same, but different. We've got this nice inverse level here, same as this. We've got the same sort of pattern, kind of like an ascending triangle, I guess, or ascending wedge, however you pattern traders call it. Ran into these previous highs, ran into that level, and you know, we're sort of getting some rejection now. I think and hope that we're coming lower. I still like 49,000, 32,000 on Bitcoin, other assets as well. Like I'm not keen on getting involved in equities just yet. I put a little bit away every week as part of like a longer term investment plan, something that I do personally. But in terms of like sticking a lump sum in, we're still at all-time highs. Like I just realized because I've changed my colors, you're probably not going to be able to see this very well. Just change all those black. In fact, it would probably just help if we turn the opacity up, maybe background. That's why. So if we judge on like literally the most recent dump, which was back in Feb 2025, so pretty much almost a year, well, pretty much a year ago. If we were to follow suit with the same sort of correction, then we're looking down here. Do I think we're going to get there? Probably not. But as we track lower through this kind of box here, through this sort of area, I'll be adding, I'll be allocating some more capital to the S&P. Not financial advice, of course, guys. This is just what I look to do. This is kind of a nice area, to be honest. Like every time this sort of, that was a pretty nasty dump, and whether we get it or not, I think completely depends on World War III and the tensions at the moment between Iran, US, Israel, and whoever else gets involved at this point. Obviously, the market is very on edge because of that, right? So I think we have to take a step back, look holistically. Okay, what's the max drawdown the S&P has ever been through? We've got 27% down here in 2022, 35% on COVID, 20% here. It's not unusual to see a correction of that magnitude. So why would we not say that the same would happen here, especially if tensions keep rising, right? So something that I like to do, and you know, you obviously have to go and do your own due diligence, consult your own financial advisors, etc. But is just put a small amount away, whether it's weekly, and we're talking like £5, £10, £20, whatever you can afford, if you can afford it. You know, and then when there is a big dump, when there is kind of an exodus of capital from equities, that's when you start putting in a little bit of dry powder, stuff that you have stored on the side in cash. Or one of the biggest things that we go through in the IMC study material, which is investment management certificate here in the UK, is there's an 80% or 80% plus weighting to asset allocation as being the #1 driver of a fund's portfolio performance. Now, what that means in general terms, I'll try and kind of make it as sound as simple as possible, is that it doesn't matter the time you get into the market. It doesn't matter whether you pick the best stock or the best crypto asset or the best metal, whichever it is that you're investing into. All of that has such a small percentage effect on your portfolio performance as a fund. The biggest thing that will determine your success as a fund is where your capital is. Is it with equities? You know, if you're sat through a 10-year bull market in equities and you're sat 90% in cash and gilts and bonds, you're obviously going to underperform, right? So it's less about picking the best stock, but having your money in the market that is rallying for that period of time, right? So it's super important just to remember, how is my portfolio? And your portfolio can be £1,000, it can be 10,000, 100,000, $1 million, it can be any amount. You have to treat it the same. How is my portfolio allocated right now? Am I in the right areas? Even if it's less of a case of, you know, if you're doing it with a demo and you're just learning the process, even if it's a case of understanding how to allocate a portfolio or how to move your capital between different markets, instead of F Dylan 77. I wonder if he's on the call. I wonder if he's in the session. Completely lost track. Yeah, not everybody has to be, you know, a multi-millionaire portfolio manager to practice this. Anybody can do it. Make sure you've got a balanced portfolio. Make sure you're staying up to date with, you know, macro events, with fiscal policy, monetary policy, government regimes, all of these different things, so that you can make accurate decisions of your asset allocation. As it has over an 80% directive, what's the word? Contribution? Is it? or the determination of your performance overall. Okay, that's super annoying. Just got swerved on my target on euro dollar, but it is what it is. Hopefully it tracks lower throughout the rest of this session. Okay, Son of the King, how does Darwinex choose which Darwin's going into the index? Now, I actually did a bit of a long session, I guess. I did an intense session back in mid 2025 where we discussed this in some detail. I went through the whole list of the different requirements. I'll bring up the session now. I won't go through it in major detail because it is a 2-hour long presentation. But we can sort of, I'll sort of briefly touch on it and show you. So here we go. So these are in order of importance. This is how we look at strategies, and this is what we judge them on. So number one is the length of the track record. If your track record's a month old, of course, you're not going to be allocated capital in the index. We have to know based on the length of time and the amount of trades that you take, that your behavior is kind of predictable moving forward. We don't want to allocate capital from the fund and then you go and blow up in the next week or completely change your strategy. So track record longevity is something that you can't fake, right? It's something that can't just change overnight. Second is your loss aversion profile. How prone are you to holding on to massively losing positions? Do you balance risk? Do you get rid of that? Do you balance risk? Do you close losing traders, before they death spiral into a massive losing position? Are your winners bigger than your losers on average, etc.? That is also super important because it negates a lot of heavy risk takers, martingalers, grid traders, all of that sort of stuff, and also shows like positive asymmetry on trades, which is really, really nice to see. And then we have trend orientation. So this is starting to get like a little bit watered down in terms of importance now. We track, does this trader go with the trend? Are they more mean reversion? Do they trade breakouts? So that we can balance a portfolio, right? The last thing that we want is everybody trading a gold breakout, right? Otherwise the index just becomes a gold breakout strategy. Then we go into asset class correlation, exposure, strategy, discipline, consistency, execution type, drawdown correlation with the index, and risk management stability. So you can see as we start to get down, like the drawdown correlation with index, whilst it's important, we don't just want to keep adding hundreds of strategies to the index when they all go into drawdown at the same time as the index, because again, there's kind of no benefit to the fund to do that. What we would like to do is go, well, strategy A goes into drawdown at this period of time, strategy B goes into drawdown at this period of time. As a portfolio together in the index, they go into drawdown at separate times, meaning they withhold each other up when one is underperforming. Therefore benefit or helping the index benefit from diversification. And that's kind of it. There is a discretionary element to it as well. So the Darwinex Labs team does go through each track record and assess all of this on an individual basis, before allocating capital. But this is kind of the main systematic process that they go through. Rebalance, it will happen again. People start to trade based on your charts. Yeah, to be honest, I'm kind of annoyed. I didn't trade based on that Bitcoin chart. I was saying to Blaine, because I said it. Let me load it up. I said it on that date, right? And then I didn't check until the following week, which if it was a Wednesday, the following week was this candle. And I was like, oh, wow, what a nice trade. Now it looks like we're going to track lower to the bottom of this range. That's what happened, smash straight through. And, same again, I kind of feel the same way now. I have much less conviction just because we don't know what's happening tomorrow. Like we don't know what is going to happen tomorrow from the war perspective and what's going on over in the Middle East. So because I'm not a discretionary trader, I have no skin in the game with making these decisions. So it's very easy for me to look at a chart and just be like, yeah, I think that's going to happen, because to be honest, I don't really care. Yeah, awesome. Thank you. No, it's an absolute pleasure, dude. Absolute pleasure. I don't know if anybody wants me to take a look at their Darwin today. I'm more than happy to do that. Otherwise, we can talk markets. We can talk strategy development. I'm more than happy to do whatever you guys want to see in these sessions. I appreciate like doing the same things every week. Sometimes gets a little bit stale and a little bit boring. So the last thing that I want is, especially for you guys who turn up to these sessions week in, week out, is to just come and say the same old things, you know, and do the same old things. Rapalas, actually, Blaine mentioned earlier that you've created a strategy for the charity Darwin. So that's massive, dude. I appreciate that. Massively. I think if I load up the strategy Darwin. Oh, the charity Darwin is here. So these are the systems that I have put on the charity Darwin. Blaine has also put his systems on, or a couple of his systems on that he's built. The problem was we were actually in positive equity. However, there was a couple of S&P strategies built on strategy quant that weren't acting the way that they should have been. So they wasn't implementing a stop loss. So Blaine and I made the decision earlier on this week to close the trades because they were far past the max loss, and just shut them off the Darwin to save us from any future sort of pain. That was a discretionary decision that we made, but ultimately it kind of is what it is. We know that we are profitable, both of us, in building systems. So yeah, it's a case of we'll just have to build that back over time. I'm currently in euro dollar short, which is playing around down here. I mean, this is a very negative risk to reward system. It's based off of an inside day candle, super high win rate. I can't load Notion at the minute. I don't know why it's not working today for some reason. So I'll probably hold this going into the end of the day. However, one of the things that this was also a massive realization that I had this week, right, is I had 4 trades going into this weekend. Bearing in mind, I rarely ever hold into a weekend. All of my systems usually close out. It's very, very rare that, you know, I'm holding positions at the end of the week. Just move things around on here. Oh, I've lost everyone. Here we go. StreamYard. Moving things around so it's a little bit easier for me to see. Yeah, it's very rare I hold positions into the weekend, and if I do, it's usually like 1 or 2. Well, not even 2. It's usually like 1 trade. But usually I close them out. A lot of my strategies have like auto close features built in so that I don't hold them into the weekend. But just typically last week, I ended up holding 4 trades into the weekend. In the history of XAQP, I've never held 4 trades into the weekend. And then the US and Israel decide to go and attack Iran on Saturday, and I'm sat there very selfishly, and I understand it's such a heartless way to think about a situation that's, you know, devastating lives, and you know, people are losing their lives over this. And as traders, we kind of have this weird moral complex where we're like, oh my God, am I going to lose money? And then you're like, well, there's more at stake. You know, there's people literally losing their lives, and here we are worrying about a bit of money. You know, so I had this like weird moral dilemma over the weekend where I was stressing all weekend about market gaps. And I just had to keep reminding myself, here we go. Looks like we're tracking down to target now. Hopefully I don't jinx it saying that. And, you know, I just had to keep reminding myself, listen, you know, the market is what it is. We're going to have good days, bad days. You know, there's nothing that we can do. It's really out of our control. However, I never want to be in that situation again. So I'm now building safety features into all of my strategies, so it will close at the end of every trading week. Moving forward, I may have to rejig and readjust certain parameters and certain systems on some strategies. I'm going to close this out here. Don't be a dick for a tick is a life lesson that a lot of traders should take. Now, of course, you start messing with probabilities if you're closing loads of trades really early, but don't be a dick for a tick is something that a lot of traders should take on board. But yeah, anyway, in a big, long, roundabout way is be very careful holding trades over the weekend right now. I was very, very lucky, right? Because I was in $3 yen longs. If we take a look at the market gap on dollar yen, where was it? Monday. There basically was no gap. Yeah, that's funny because that actually has a little bit of a gap. But for me, dollar yen opened at the price where it closed on Friday. Actually, no, yeah, I think that's about right. It's probably a little bit of a discrepancy. Dollar yen opened pretty much at the closing price on Friday. So I got out of those trades. And I was also in a gold long. Where's Monday? Friday. Yeah, I was in a gold long and it gapped up to my target, which was nice. But obviously, if I was the other side of the market, who knows how far it would have gapped against you. And the realization is, right, that you may not think about these sorts of things as like safety precautions or safety measures. You may not think it affects you. You may not worry about it, but it takes one time for one of those things to completely wipe out months, if not years of progress. You know, they were pricing gold. Some weekend brokers like IG were pricing gold at like 5.4, 5.5. Now on Friday close, Friday close was 5.2. Now, if you were short gold with a relatively tight stop and decent size, you could have blown your account just by the market gap, like completely blown. And it's completely out of your control. You didn't necessarily do anything wrong other than hold a trade into the weekend, unless you pay for insurance with your broker to protect you from like gap risk and you can protect, like pay to have your stop insured. Not every broker does it, but some brokers do it. Like I highly recommend, specifically in market environments like we have now, where there's so much uncertainty, to hold as little exposure going into the weekend. Luckily, I came away relatively unscathed. In fact, I actually came away up because gold gapped up into my stop, but it just as easily could have gone the other way. You know, if I was in the wrong asset or the wrong direction or whatever it may have been. So yeah, just something to learn from. And I think, especially as you guys start to scale and start to take on investor capital and start to become more of a professional, these are the kinds of things that cross your mind. I no longer worry about making a return because I know it will happen. If I do the right things, if I build the right strategies. The same with you guys, like Rapalas, you know, you know what you're doing. You know how to build a strategy. Like it becomes part of your routine, right? Your daily or weekly routine. You generate an idea, you test it, you run it live. It will have a positive expectancy over a period of time. And guess what? If it doesn't, you stop trading it and you trade something else. But all of that can get overridden by one black swan event that screws you over. So I think when you start thinking like a professional, you begin to worry about security and risk far more than generating a return. As of right now, I'm managing $3 million in investor capital, which is the most I've ever had to touch, $1 million of which is through Darwinex. And then I also trade with some boutique funds outside of Darwinex. And so I don't care about return at all. I literally couldn't give a monkey's, because it doesn't matter whether you're on $1 million, 2 million, 5 million, 20 million, 100 million. You will make money if you have a positive expectancy. The only thing that you can control on a day-to-day basis is your risk, is your exposure, is how you act, the safety measures that you have in place, the protection mechanisms. And you know, when I'm speaking to funds, they generally ask more questions about the risk than they do about, okay, well, how much do you make? I've never had a fund say to me, how much do you make, you know, on average per month? They don't care. As long as over the course of a year, again, going back to the index example at the beginning, as long as they know that you have an edge and you are positive over a long period of time, all they care about is, am I safe allocating capital to you? It's the same with Darwinex. I mean, it's easier for us because we have your verified record, so we can analyze everything. And we can know for sure whether you have like an edge. But we care more about your risk and security as opposed to, you know, making 100% returns per year. I've just thought, I wonder if my DART, just shy of new all-time highs. Oh God, it feels so good after such a tough February. Yeah, all-time high was 14607. We're currently at 14598. So one good trading day and we'll be back above new all-time highs. And February will be kind of like a distant memory. I'm kind of feeling this period is akin to over here. However, XAQP is in a far, far better position these days than it was back there. Back there, it was still a baby. It was still learning. I was still learning. who is still adapting and growing. CK, keep up the good work. It's well appreciated. Massively appreciate that, dude. A lot of you have actually been reaching out to me recently, you know, with some really kind comments. And I just want to let you all know, like, I really, really appreciate anybody who reaches out to me. I might not get back to you on the same day because I'm awful at replying to messages. But I read every single message that you guys send. And there's a lot of people reaching out to me saying, you know, thanks for everything that you do for Darwinex. And a lot of things in, you know, in those lines. And you know, that's why I come on these sessions. That's why I do all of these live streams and have been for the past 2 years, because it's just fantastic to get to know you all individually and, you know, have that relationship with you guys. So I appreciate all the kind comments massively. Son of the King said, I'm in drawdown on Eurodollar long mean reversion, 0.6%. Also, I agree with your analysis on the SP 500. Looks like it's building the distribution range. Prefer to buy stocks near the weekly 200 moving average. Yeah, absolutely. I mean, all we have to do, oh wow, gold tanking again today. What's that on the hourly? Let's take a look on the daily. I realized that these candles are probably too difficult to see. I should say, oh god, that's like, I don't ever use TradingView anymore. It won't even let me delete it. There we go. Yeah, it's probably a little bit easier to see. Yeah, I mean, silver as well, like, just violent, man. I have breakout levels on silver and it's set back down at like $44 or something, somewhere down here and above the high. So I doubt I'll be trading silver for a long, long time. But yeah, all we have to do is look at previous distribution on equities. Like this, again, this area up here looks very similar to this area over here. It's kind of like my favorite phrase in markets. It's the same but different. You know, we have that nasty tank. So we have this period, albeit this is far, far sharper. And then we just have that extended rally where, you know, nothing seems to go wrong. Same again. This is slightly more condensed. Don't get me wrong. This period here is slightly more condensed than this, which is why it's the same but different. Just looks like a little bit faster of a scale. But there's nothing stopping this from tanking sharply down again, especially if tensions rise and, you know, things escalate in the Middle East, things start getting a little bit worse. Then yes, of course, equities are going to suffer, and that's where, as traders, we kind of step in and go, or investors, I guess, we step in and we go, well, I'm willing to take a bet because if history is anything to go off, right, the US economy will always recover. You know, that's not me saying buy the S&P because it will always go up. But generally, like if the S&P goes to zero, and I say this to everybody, like obviously, I don't know if you guys get this a lot, but being a trader and working in the industry, like family and friends always asking for advice. And I just say, listen, I'm far past that of giving family advice. I don't like doing it. But if the one piece of advice I can give you is if the S&P goes to zero, you've got bigger things to worry about than losing a bit of money. You know, that basically means that Google, Meta, Apple, Tesla, Nvidia, all of these massive, massive corporations have basically gone kaput. There's a bigger thing to worry about because there's only one instance where I believe that would happen, and that's if there's nuclear warfare, right? And you blow up all of America. So as far as safe bets go, outside of you know, gilts and cash, like the S&P is probably the lowest risk asset. However, with everything, with any investment, with any assets, I think the important thing is like timing can determine your individual P&L completely different to the asset performance, right? Which kind of goes against what I was talking about earlier when I was talking about asset allocation being so important, which it is. But if you just if you're an investor and you keep buying during these euphoric moments over here, this is the problem with changing everything from dark to light. If you keep buying somewhere up here, you know, and over here, which it's so easy to do. And like in hindsight, we look at it and we go, oh yeah, but that's so easy. I would never do that. if you don't tell me that you get FOMO, I have FOMO. I want to buy the S&P right now. I really do. But if I learn from past mistakes, I learn from history, and know that there's a higher chance that it will come down before it goes up. If I miss out, cool, well, there'll be a dip in future again. You know, but these investors who buy up here and then endure a 20 to 30% drawdown, who knows? They might just panic sell down here. Just because they're not trading doesn't mean that they can't panic sell. So if they're buying at the top, selling at the bottom every time, guess what's going to happen to them? They're losing 30% of their part here. They've now got a smaller part. They're losing 25% of their smaller part. They're losing 20% of their even smaller part. So like, you can still screw yourself over even with an asset as safe as as lower risk as, you know, the S&P. It can still happen. So just make sure that, you know, A, you're investing with a longer term mindset if you ever invest into the S&P, and B, you're picking your times. You know, you absolutely have to pick your times. Son of the King, I sold my stocks and bought Bitcoin in my retirement account at 65K because it's sitting at the 200-week moving average. My only fear is if stocks tank, then Bitcoin will go to 40K. Yeah, I mean, listen, I like Bitcoin at 50K, and I really like Bitcoin at 32K. Everybody, again, right? Again, it's the same but different, right? And I released an interview with DOQ, the Darwin DOQ last week, ex hedge fund manager over in Switzerland. He's now in Cyprus. And we spoke about Bitcoin a lot, and I kind of said, these are the levels I'm looking at. I like 50K, I like 32K. And he kind of chuckled and he said, yeah, me too, but I don't think it will get there. And then I look at a chart and I'm like, this is just picture perfect, exactly the same sort of price action, right? You have this. In fact, I guess we could extend that over there because that acts as some form of support, so resistance. You know, I'm not a massive, oh, it's happened before, so it's absolutely going to happen again. But just look at how, like, oh, you know, it's exactly the same. We have this first peak, we sell off, we create this base. I've actually put the base in the wrong area. Whoops, silly me. The base over here. You know, we come up, we create a second peak, we sell off, we stall, and we form a rising wedge pattern right above. And I'm not a pattern trader, it's just clear as day, it's clear as mud in crypto. Rising wedge pattern, we tank straight through it, we start consolidating beneath, we consolidate beneath. And then we have this like extended period of time of like almost 2 years, a year and a half underneath that area. Now, if we get a year and a half underneath here, what was it, like 550 days? Like, it's a long time, right? But how bizarre, like, I just find it bizarre that this looks so similar. In fact, let me get rid of all the drawings and then just do we'll do the bars pattern. What we'll do, we'll scale it up to size. So let's say something like that, right? And again, this is not financial advice. I'm just playing around. I'm messing about. Yes, I invest into Bitcoin, but this is not what I'm forecasting or saying it's going to happen. I just find it super interesting that pretty much to a T, prices follow the exact same pattern. Maybe bring it down slightly. Yeah. First peak, second peak, consolidation, breakthrough, consolidation, and then just this kind of nasty period where nobody talks about it, and then we go on in a few years time to re-rally. Not going to get into the semantics of all the cycles and stuff that's very Bitcoin specific, because I don't think it's necessary, but it's in times like this when people are scared of it going lower, that's generally when you know, you will form a base. Again, with the tensions that are happening in the Middle East, who knows what could happen. If quantum computing comes out in the next few years, who knows what could happen. However, that's always been the case with markets, right? The market has been around donkey's years. There's always been risks of, you know, war, terrorism, cyber attacks, quantum computing, all of these different things. And, you know, when you overcome one, there's a new threat to your P&L. And it's kind of like, you just kind of have to roll with the punches. And again, going back to my initial point from the IMC exam is asset allocation. And the way that you structure your portfolio. And yes, we're talking at hedge fund level here, but you can take the kind of infrastructure and run it for your personal portfolio. Asset allocation accounts to like 80+% of, you know, your performance as a fund. So it's super important, like where your money is, not specifically where you bought in or finding, you know, the best stock or the best crypto. Son of a King, I'm definitely saving some cash to buy lower. If this weekly reversal doesn't hold, I'll sell and wait to buy near 32K. If history repeats, we get a bounce at 84 and then roll over under 50. Yeah, I mean, obviously I'm not going to tell you where to buy and sell. I like, so my strategy with crypto specifically, and how we doing, Lise? Hope you're all good. I've been around in crypto for a long time. I think I first started in 2016. I've seen a lot of the cycles and the way it moves, especially when it was so liquid. And my favorite thing to do these days is just buy a small amount each week. Just a little amount, 10, 20 quid, however much it is, whatever you have spare each week. It can be a fiver, it doesn't matter the amount, although you probably get rinsed on fees, but then you get rinsed on fees no matter how much you put in. Just buy a little bit. And then on the days where it doesn't look like it can get any worse, and, you know, Bitcoin's down 10% and altcoins are down 20%, you stick a lump sum in. You just go, okay, well, now's my time to be a bit more aggressive. And then guess what? If it recovers 20% within the next 3 months, you can take some of your profits, roll it back out, put it back into cash and keep it as dry powder. Something I used to do actually was I'd pick a pair for like a few months, usually on a pair that was like rising in volume. So I'd look at something like Ripple against Bitcoin, and I would just flip between the two and just try and stack as many sats as I possibly could. There was a level on Ripple and Bitcoin. I can't remember what level it was. Was it this one? I think it's around, maybe it's slightly lower here. So this is on the weekly time frame. I remember having conversations with people like about 3 or 4 years ago, just saying like, if you want a free trade, just buy XRP Bitcoin at this level. Every time it hits there, just buy it, just buy it, just buy it, just buy XRP. And then whenever it rallies away, and we did back in the day, we calculated the average rally away. It's like 50 to 70% each time. You just sell it back into Bitcoin and you just kind of play. It was like, just play this range. And it still holds true really to this day. You could layer in, you could like stack grids. So you just be like, okay, well, I've got 2 pots. I got Bitcoin and Ripple, and I'll just keep converting. Obviously, there's more, you know, there's more that goes into it than that. I've watered that down a lot. But yeah, just something to mull over. Gold's insane on the weekly. Gold is just insane. Yeah, interesting. Broke down on the weekly. That's the low of last week, and now rejecting and sort of, yeah, finding a home beneath that level. Interesting. Mr. 5000 guy, how we doing, Rob? Hope you're good. Daniel Ramirez, I only trade XTI. I'll do 1 year on pure demo for that, but I want to know in DarwinX 0/live in the long term, is it worth to build an index only based on one symbol? I do 0.15% risk per trade and 2.71 RR. That's very precise. 2.71 risk to reward. That's like ultra precise. listen, we have people at Darwinex who trade only one symbol. We have people who trade, like myself, who trade multiple assets. It doesn't really matter as long as you can trade. That is the key thing here. As long as you can trade, as long as you are profitable long term, have a positive expectancy, then there's no issue. The only thing that you might find is that you have a relatively low capacity. As a retail trader or a semi-professional trader, it's not too bad. But if you're looking to try and go full professional, maybe even institutional, then yes. And this is outside of Darwinex, you will probably struggle unless you're getting best execution at like a large fund or something. You'll probably struggle with just a one asset portfolio. Rob, when is the other lady coming on? Claudia, I presume. I'm chatting with Claudia. I'm actually meeting her to record a podcast together on the 19th of March. So we'll probably plan it then, hopefully for the start of April. But super, super excited for that. Claudia is amazing. You see my comment? My comment's never sent on here. Don't know why it happens on the live streams too. Yeah, it's strange. That's probably because you've got about 400,000 YouTube accounts. That's a great exit on euro dollar. That reversal. Like I say, it is a negative risk to reward system. However, it's a very good one. I'm sure you've all heard of inside bars before. I'm sure I haven't got to explain what an inside bar is or an inside day. Where's euro dollar? But yeah, inside day, high lower than the previous day, low higher than the previous day, and then I just trade the breakout. But now that the classic like inside day pattern is, now that this low has gone, what's high probability is that it will now run and turn. However, when I tried to test that in like a systematic way, when I tried to test it in a systematic way, I could never get that to work, as in like trading the reversal, because there was just too many variables that like you had to test in terms of, well, how big do you put your stop? How far do you tie? I just couldn't get it to work. Whereas I could get the inside day break to work, which is super, super great. I run it on two assets. I think a dollar yen. I think I don't run it low. I used to run it in negative risk to reward on both, but I think I changed it recently. I made some adjustments to the dollar yen version of the strategy. Oh God. Where is it? Dollar yen inside day. Yeah, I actually run dollar yen at 2-to-1 risk to reward now, but I can't remember if I close it on the same day. I can't remember. Why is that going over there? For the risk to reward, I use math. That's why eventually I'll try to diversify, but I only see great results on XTI. Thanks for the answer. Absolute pleasure, dude. Yeah, listen, if there's one piece of advice I could give is, especially if you're in the learning phase, and Rob will back me up on this because I've said this to him a lot. If you find something that you're good at, double down on it, right? Become a master rather than trying to be a jack of all trades. And then eventually when doing something really well, and you're not focused on becoming profitable or getting to that position, when you already are, then you can start thinking, okay, well, how can I 10x what I'm doing now, right? And if that's adding more assets in, at least you've got so much more experience and value and knowledge from what you have built over the past couple of years or however long it's been, that you'll probably be in a better position to start adding in new strategies or new assets and stuff, as opposed to trying to do it all in one go before you've really mastered one sort of thing. So super, super important. Anyway, guys, I'm going to call it an end to the session here because, to be completely honest, I'm desperate for a wee. And I have jiu-jitsu in just over an hour, and I walk there and back. So I need to leave in about 20 minutes. So I'm going to get myself, hence why I'm in compression gear. It's a no-gi day today. There's 887 people on the live stream at the minute. That's like, it's not a record because I think we've had over 1,000 before, but that's fantastic. Super, super grateful for every single one of you tuning in. I think next week I will be back. I will be on with Blaine on Tuesday. We'll be on Wednesday. But then both Blaine and I are traveling to Madrid on Thursday, so we won't be available for a Thursday live stream. I don't know. Maybe we'll give you guys an extra long one on Wednesday next week or something. Maybe we'll do that. Yeah, Rob, I'll message you. I'll message you after the session, dude. I'll message you after the session. Anyway, guys, I want to thank you all for tuning in. Thank you all for your comments. It's always a pleasure to speak to you all. Like I say, we'll be back Tuesday at 4 p.m. UK time, unless, yeah, it's 4 p.m. UK time. Wrong day. Yeah. Okay. Next week. Oh, I can't find where we are. Next week, we are joined by Max from Perfectus AI. Very FX streamer. I think I've shown you guys before. Perfect. Oh, God. Show you their website instead. Reason my computer like corrupted this morning and it's logged me out of everything, so I need to go back and log into everything, but it's, yeah, super frustrating. It's a block builder very similar to FX Streamer. It has some limited capabilities that FX Streamer has over it, but then it's also better than FX Streamer in a load of different ways. If you have the cash to spare on both, like if you're earning money from your trading and you're an algorithmic trader or a systematic trader, then absolutely, test both out. If not, Perfectus is way more user-friendly than FX Streamer is, and they give you a lot of templates and strategy ideas. So for a beginner, 100%, I would push some Perfectus direction. If you're more of an advanced trader and you need custom blocks and custom code, then FX Streamer, I think, has that capability that Perfectus doesn't have. So it's worthwhile having both softwares or both systems there. But Max, the CEO and owner of DarwinIA. So Max doesn't just own Perfectus, he is a trader and has been trading with Darwinex for many years. So since March 2022, he's managing 1.6 million in investor capital. PYE is his Darwin, and he has built Perfectus AI. He also runs a fund out of Amsterdam Stock Exchange. We have also done an interview with him. Rob, this might be a good session for you to join, dude. If you're building strategies. Darwinex. This is our interview with him a month ago. You can see he's sat in Amsterdam Stock Exchange there. He runs a fund out of the stock exchange. So super interesting guy. He's got a lot of credibility, and his record is verified on Darwinex as well. So it gives him that extra inch of credibility. He'll be joining us next Tuesday at 4 p.m. UK time to go through strategy building, strategy development, all in the name of the charity Darwin. And we will likely use Perfectus on that session as well. So that's the next session that we'll be back for. Guys, I want to thank you all for joining. I want to thank you all for putting your comments in the YouTube comment box and the Twitter comment box. I hope you all have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world, and I will catch you in the next session. Have a great weekend, everybody.